Hi, it's Lee and welcome to the Tesla Economist. Like we've been saying lately, Tesla stock is running and looks to hit $300 unless there were any macro issues or black swan events that get in the way and stop the momentum, of which we have now had, with the Fed saying they expect 2 more rate hikes, but they haven't actually raised rates. This may just be a threat or another way of controlling inflation and the markets. If people expect more rate increases, then that will reduce consumer confidence and thus spending. If consumers stop spending, then eventually there'd be disinflation or deflation as there'd be too many goods, or too much supply and not enough demand. To increase the demand, then prices drop to meet supply. Most consumers have less money when rates are high due to higher payments on debt. Then everything else is more expensive if you're buying with debt, like cars or anything on finance. Then there's the opportunity cost of keeping your money in the bank, receiving higher interest, rather than spending it on goods. If the Fed can threaten rate hikes and generate the same effect without having to raise rates, then they may not actually need to raise rates, or at least not as much as they were saying, and thus increase the likelihood of a soft landing. Tesla seems to have reacted more than most stocks on this news, presumably because it had run so much before and investors were worried, but it feels like a bit of an overreaction now. Sure, added to this some stock analysts weighing in who, in my opinion, are not as credible as many investors in the community. Think how many stocks these analysts have to follow and how much time and effort many of us put into Tesla and Elon. Like we just had from Goldman Sachs downgrading Tesla from a buy to neutral, after Barclays and Morgan Stanley doing the same. Yet, ironically, raising their price targets, which seems a bit contradictory. They're just adjusting to what the market is doing. Their reason is that the market is giving Tesla more credit for their longer-term opportunities, mainly FSD, and presumably because the market has been over-exuberant about the AI potential. But does it matter? To me, what was important here is the market psychology. The market ended up valuing Tesla up to almost around $280 at one stage, and this was not in a bubble. This is how much investors value the potential of Tesla, realizing that they are the leaders in their field. Tesla are already offering EVs at very competitive prices compared to the equivalent ICE vehicles, and definitely winning on cost of vehicles compared to the competition. This lead has become more apparent lately, with the transparency from Ford, along with Ford and others wanting to join the Tesla charging network. If Tesla are already able to offer so much value at these price points, then when the technology improves further with tens of billions of dollars more spent in the industry, if not more over the whole decade, then the cost of batteries should only come down, if the competitors are going to have any chance, leaving Tesla even more profitable. The competition may have to resort to more help from Tesla in order to achieve what they're doing, possibly with the drivetrain and obviously FSD. As for Tesla's drivetrain though, we're really hoping they've done something special with the new long-range Model 3 and hoping that it is not a nickel-based cell, yet still able to get that much range, a new record for efficiency. I keep saying that Tesla have not set a particularly high bar for themselves over the next year or so. Therefore, if the stock price is able to hit close to 300 or possibly over 300 later this year, then that shows how much value the market and investors see in this company and the potential of the products to come. These investors seem very patient too and are willing to wait, because in the next few years, FSD just needs to be solved, and then it's there in every Tesla, just as a software update, instantly. Depending on when it occurs, there could be about 10 million or so FSD-capable Teslas, just like that. In the meantime, Tesla is working on getting all the hardware out as fast as possible in order to take on these updates and become self-driving cars, and potentially robotaxis. These numbers get so big that it makes sense that Tesla's current stock price is pale in comparison. The upside significantly outweighs the downside, and no one wants to miss out, and no one wants to sell beforehand, and instead accumulate on every dip, reducing the liquidity of the stock and thus squeezing the market valuation higher. I don't think there can come a time where Tesla capitulate and say, FSD is not possible, we've given up now. Which means all that can happen is Tesla get closer and closer to solving it. FSD keeps improving update after update. The same with everything else. Whether 4680s, Cybertruck, bots or Gen 3, Tesla don't have to get them right immediately, but just show progress at a good enough rate that people can plug numbers into and see how good they look. And the story continues. The more improvement and closer they get to be achieved of reaching these goals, then the more the stock will keep increasing. Once these goals are achieved, or even just one or two of them, they're so valuable the stock price will go to next levels. if Gen 3 can produce EVs at half the cost, if 4680s can reduce cell cost by 30 to 40%, if bots can replace any human labour, these would all have so much eventual impact on finances. Hence why the stock should keep increasing over time. And like I'm saying, is that investors are patient and can wait years and years for some of these to occur, as they are so valuable. Of course, it won't increase linearly, and there are all sorts of events that can make the stock go down in the meantime, like how we said the Fed at the start. Equally, we're in a time of high rates, which has kept the stock down significantly, so once they're relieved, then the stock can also rise again, as it is being suppressed at the moment. We just hope it won't be too rough a landing when we finally get there. We also have various events occurring in Russia and Ukraine, which also should hopefully come to an end, but as we've just seen, anything can happen there too. But there is always something that happens every year, yet people are still buying cars and Tesla is still making them. Then Elon, of course, can do various activities like sell Tesla stock on the open market and sink the stock price, or become more political and put some consumers off the brand. However, Elon is far more likely to add value to Tesla over the long term and discover more opportunities for the company and products, and he won't give up. My concern was that the market no longer valued Tesla like it did in the past, due to issues with Texas, Berlin and 4680s not ramping to where we were told to expect. My biggest lesson is the market, or especially Tesla investors, are very forward-looking and patient, and now we've seen that they're willing to put almost a $300 price on the stock, even during these times. These times being very little to expect or going on, we aren't seeing or hearing about any major increases from Texas or Berlin, and the 4680 production in Texas is nothing close to moving the dial, yet the stock doesn't care. That's not the investment. The investment is the future, in what Tesla will achieve and become in 5 or 10 years' time, of which we're saying the numbers are huge, and that is a really long time for Tesla to achieve so much by then. And the analysts are right, Tesla's earnings aren't going to be great, probably not much of an increase until even as far as sometime in 2025, when Mexico starts ramping seriously. That's what will be making the stock price increase mainly next year, watching the progress of the build. Hopefully someone asks when they expect to break ground on that in the next earnings call, as I'd like to know. On top of that, the ramp for the Cybertruck, which we have already been warned will be slow. So any progress, there will be good news. In the Q4 earnings call, we were also told that 4680 sales will finally ramp next year too, but I really don't think the stock price is holding its breath on that one either. So any progress is good there. I would hope that Texas could get to at least 30 gigawatt hour year run rate by the end of 2024. However, the Cybertruck is not dependent on those either, as Panasonic are aiming for a similar run rate for their 4680s as well. Therefore, seeing all the progress we expect at these rates and how investors don't seem to be too hasty, and the stock price almost hit 300 already, and during a recession, high interest rates, inflation and war, then I'm quite hopeful, at least in the long run, it should keep running, particularly when there are more tangible elements to back it up. Hi there, I'm using Verbalate AI video translation and lip sync software. It's pretty amazing. Watch this.
I can translate my videos into other languages. For example, I am now speaking Hindi.
नमस्ते, मैं पहली बार हिंदी में बोल रहा हूँ, लेकिन Verbalate इसे इतना आसान बना देता है.
Or how about Spanish?
Hola, vaya, increíble.
También puedo hablar español.
Sign up at verbalate.ai today to gain early access to trial the product for creators and strategic partners, and gain the ability to translate and lip sync videos in all major languages. You can view the info in the description below.